Now, I was watching CNBC International this morning and I noticed SocGen's numbers flashing across the screen. Profit down 42%, all sorts of problems there, but no problems in South Africa because we have well-run banks in this country. And to reflect that, the interim results from Nedbank were released earlier today. Let me give you a few of the highlights. The dividend was declared of R3.40. Headline earnings up 25%. Diluted headline earnings per share up 23.5%, and ROE up to 15.7%. In the Power Lunch Joburg studio is Mike Brown. Good solid stuff, Mike. I mean, just before we get into the semantics of the numbers, was there any difference between the first quarter and the second quarter? Was there any sort of slowdown that you noticed in those last 3 months of these results?
No, we do publish a first quarter trading update, and I think we were particularly pleased to see that the momentum from the first quarter did continue into the second quarter. I think if we look further ahead, though, we would expect somewhat of a slowdown in the second half. We still think we're going to have reasonable growth for the full year, but with the recent interest rate cut and the tougher outlook for GDP, I think it will be difficult to get 25% growth again in the second half.
Yeah, let's have a look at some of the semantics of the numbers now. As we've said, headline earnings per share up around about 23.5%, 11% growth in interest income, and nearly 16% growth in non-interest revenue. Impairments down. What were the highlights for you?
Yeah, I think certainly from our perspective, the highlights would be if you look across all of our key ratios, they all moved in the right direction from December through to June. So that was good. And then if you look at a broader picture of Nedbank's results, not just what we're doing for shareholders, I think if you look at what's going on in the staff environment with the improvement in our culture and values surveys, what's going on in the client environment with decent growth in our retail client numbers up some 12%, good outcomes from our new products that we've launched, what we're doing in communities, and in particular our level 2 BEE score, and then our capital levels in terms of what we're doing in the regulatory front. So I think the real highlight would be performance across a broad front.
Yeah, but if you look at the various clusters, there's a definite pecking order here, a definite sort of league table. And if I could read out the league table in terms of headline earnings increases, retail up 38.4%. You really seem to be getting this right. I mean, it's been a problem in the past, but now you are probably taking market share as well.
Yeah, so our retail business certainly has had an excellent first 6 months. As you said, earnings up 38%. I think to look at the performance of any of our clusters, you have to look at both the earnings growth and the return on equity. So all of our other businesses produced more than 20% return on equity. So while retail grew very strongly, and we're very grateful for that, the next challenge is to get that ROE, which sits at around 11.8%, up above our cost of equity, which is 13%.
Okay, so your target there is to get from 11.8 to 13, is that what you're saying?
Yeah, so we've said to the market that our retail business should reach what we call economic profit neutrality, which is ROE equal to cost of equity in 2013.
Okay, next cluster down on the league table here, Capital, Nedbank Capital up 25.1%. I mean, I have to say on CNBC Africa, we speak to Nedbank Capital people and they're always very good, and on my radio show the same thing. They're always very erudite and articulate and everything, good things to say. And if you look at the non-interest revenue, up 42.4%. Now, as a cynical sort of commentator and ex-trader, I would say that there's a bit of proprietary trading going on here. Mike, is that a healthy thing?
I think we had a very good performance, so as you say, 25% up at a headline earnings level. If you dig down into the detail of our analyst booklet, we actually show you a histogram of trading days and profitabilities in the various trading days. And what you can actually see is that we had less outliers in this 6-month period compared to the prior 6-month period. So in other words, a much tighter distribution of our trading profitability in the sort of 0 to 10 million per day bucket, which would generally indicate less prop trading and more flow trading coming through that environment.
Okay, elsewhere, wealth up 23.6%, corporate up 14.7%, business banking down 6.1%. Rest of Africa, maybe you could comment on those last clusters.
Yeah, so certainly a tough environment in the SME market in South Africa in general. So I think a 6% drop in business banking is a very credible performance given the tough market, and we've seen some drops in volumes there, but good to see the ROE still above 20. Fantastic performance by our wealth business, high ROE and high growth, And if you look underneath that, you can also see extremely strong growth in things like embedded value and value of new business, which were up some 60 and 80%. So I think those have done well. And then our corporate business has been a real stalwart. It's a big part of Nedbank, our wholesale business, and to grow that around 15% at northwards of 20% ROEs is also an excellent achievement.
You talk about a challenging environment, but clearly it's not that challenging, because if you look at the performance of the banking index of the JSE and you look at your numbers today, really, really good stuff. I mean, this is like pre-National Credit Act days, and very, very glamorous numbers indeed. You have given us a prospects and guidance statement. You've talked about Basel III. You must have an idea of the sort of capital levels and the sort of guidelines that the Reserve Bank is going to give you on Basel III, and you've presumably accounted for that already.
Yeah, so we're certainly very comfortable with our capital levels. You'll see that on a Basel 2.5 basis, which is what we're now operating under, our core tier 1, which is the number that everybody focuses on, is 10.6%. Actually, under Basel III, it's also 10.6%. So there's no difference from a Nedbank perspective moving from Basel 2.5 to Basel III, and certainly we're very comfortable to operate at around those levels.
And tell us about the next 6 months, in your opinion, your prospect statement. You're always going to be cautious because that's the way things work these days. So if you surprise to the upside, everyone says, well done. If there's something slightly less ebullient, if you like, then you say, well, we've already done that. So what about the next 6 months? How do you see it panning out for you?
So I think that the business has got decent momentum. We saw that building up in 2011 and then the first half of 2012. So I think we will still have a solid 6 month period to the end of the year. As I said at the outset, I think that our overall year-on-year growth rates will be above our target, CPI plus GDP plus 5, which is 13 or 14%, but will probably drop a little bit from the first half growth rates, particularly given the recent interest rate cut, which costs us about 160 million in headline earnings, all other things being equal.
Mike, thanks so much for your time this lunchtime. That's Mike Brown, the CEO of Nedbank.